Good morning, everybody. On behalf of RBK Chartered Accountants, AIB Bank and Dún Laoghaire Chamber of Commerce, I'd like to welcome you all to this morning's webinar entitled Back to Your Business. My name is Brendan O'Donoghue. I'm a restructuring and insolvency partner at RBK in Dublin and will moderate this morning's proceedings. We are also joined this morning by Deirdre Moore, Head of Business Banking, AIB Dublin South, who will chair the Q&A session following on from the presentations by our three speakers. Aileen, Eglington, DLR Chamber President, will bring the webinar to a conclusion with some closing commentary. Our speakers this morning are Oliver Mangan, Chief Economist AIB, who will share with us his thoughts and views regarding the economic outlook and indicators as Ireland reopens for business after what has been effectively for many a 3.5-month lockdown. Oliver will be followed by Conor O'Brien, Business Advisory Partner with RBK. Conor will outline some practical strategies for business owners as they reopen their doors and offices and deal with what has been dubbed the new norm. Our third speaker this morning is Yvonne Clarke, HR Solutions Manager with RBK. Yvonne will focus on employee issues and HR matters as employees return to the workplace, many having spent the last number of months working remotely and the challenges associated with the reintegration. We have received a number of questions in advance of this webinar, which our speakers have dealt with during the course of their respective presentations. During the webinar, attendees will have the opportunity to put questions to our three presenters, which, time permitting, will be dealt with in the Q&A session. Copies of the webinar slides will be emailed to you over the next couple of days, and there will be a further opportunity for you to raise any questions by email with Gabby Mallon, CEO of Dún Laoghaire Chamber of Commerce. So without further ado, I'd like to introduce Oliver Mangan, Chief Economist AIB, to give some context around the economy as it stands presently and some indicators as to how the next 6-month period might look like. Oliver, over to you.
Okay. Good morning, everybody. As we all know, as the headline says there, the global economy has been hit by an enormous recession in the first half of the year. It is a very deep recession. Both the OECD and the IMF say this is the biggest fall in GDP we've seen since the Great Depression of the 1930s. Now, notwithstanding that, it will be a short recession. Economies will recover in the second half of the year. Its growth is coming off a very, very low base. But there is enormous uncertainty about the economic outlook. I mean, there's many unknowns, particularly the future course of the virus, how successfully can countries exit the lockdowns, and I suppose the extent of business closures, job losses, permanent job losses, etc. And it's also the case. It's also the case that the impact varies across sectors, and we all know, particularly hospitality, travel, live entertainment, the retail sector have been very hard hit by the lockdowns and the ongoing social distancing. Now, what we have seen, unlike, let's say, the big recession back in 2008, 2009, 2010, is a very strong response by the authorities, both fiscal and monetary policy. And these are aimed at supporting household incomes, supporting businesses, etc., and helping them through the recession and putting them on a sound footing in terms of the recovery. In particular, we've seen the traditional rise in unemployment hasn't been there. We've had furlough schemes and other government income schemes put in place to alleviate the impact on the labour market. So the rise in actual official unemployment has been much less than in previous cycles. And it's important that those measures continue. The impact of that is clear in what we've seen in the last 3 months, which has been a big rise in household savings, both here and other countries. I mean, the best data in this regard are published in the US, and we all know the US consumer likes to spend, but the savings ratio in April and May got to 33%. It's called forced savings. And the hope is, and there's evidence of this, that as economies open up and restrictions are lifted, that the household sector will return to spend. So the overall expectation is that growth will rebound off these very low levels in the second half of this year and into 2021. But I mean, central banks and governments are warning that it will take a couple of years for activity to return to pre-COVID levels. It might even be 2023. This is a very, very deep recession. The hit to GDP in the second quarter is likely of the order of 20-25%. We simply haven't seen this before. So that's why I say there's a lot of uncertainty about the pace of recovery, how successfully economies can exit this recession, and it's quite a big hole to be climbing back out of, and it will take some time, and it will require a lot of continuing support from central banks and governments. Now, in terms of the more recent data and what have you, you will have seen the performance of stock markets. They've recovered strongly from their very low levels in February and March. Stock markets fell by about 35%, but in a lot of markets, particularly in the US, in Asia, stock markets are back to within 5 or 10% of their highs of the start of the year, despite the depths of the recession. And the markets believe that the policy loosening and policy supports that have been put in place will generate a strong recovery and activity. They've also been encouraged with the fact, we've only started to lift restrictions really in the last number of weeks. Other countries have been at this since early to mid-May. And the data show a big rebound in spending in May in the UK, in the US, in Australia, early indications for Europe as well, reflecting the rise in household savings. So the wherewithal is there, the money is there. The question was, will consumers go out and spend? Now, the early indications are that they have been. Now, whether they continue or not is another question. The other data we looked at are what we call PMI, or Purchasing Managers Indices, for the services sector and for the manufacturing sector. Again, these fell to levels we've never seen before. And again, in May, and particularly in June, there's been very, very strong rebounds in these indicators. So Jay Powell was out last night talking about the US economy, and he was saying, the bounce back has come quicker than expected, but there are new challenges out there, such as keeping the virus in check. Some states, we see in Leicester today, we see a number of the states, restrictions have to be reintroduced. So this battle is far from won. So there's no certainty that the strength of the rebound we're seeing in those economies, the UK, the US, the Eurozone, Australia, China, will be sustained. There's big challenges there. So it's absolutely key, as I said, that policy remains stimulatory. And the central banks, in fairness to them, have cut rates to either zero or they're at negative levels in the Eurozone, and they've been indicating these rates are going nowhere for years. We are going to have to keep rates very, very low, because one of the fallouts of the recession obviously is downward pressure on inflation, which worries central banks. So they can keep interest rates very, very low. And if you look at futures contracts, there's no increase in interest rates in the UK or Europe priced into about 2025. So these rates remain at zero or negative levels. And then we have the ongoing support being provided by quantitative easing, in other words, bond purchases by central banks. This is actually crucial in allowing governments which are expanding fiscal policy, moving from surpluses to very large budget deficits, to raise that funds at very, very cheap rates. We had the recent auction from the NTMA. It was for 10-year bonds. It wanted to raise 4 to 6 billion. It actually had bids of 69 billion. And I was able to raise that money, long-term money, at 0.25%. So these governments are able to raise money at, if you want to do shorter-term funding, at 0%, longer-term funding, it's 0.25%. So that is encouraging governments to support their economies, to provide income supports, and to increase spending. And of course, for the new government here, we're promised a stimulus package in July. So I think the reason we're seeing that type of support is that the risks remain to the downside for the recovery. That there's the risk of a second wave, renewed lockdowns, and also a concern that we could see, particularly if the virus persists, what we call scarring effects that would inhibit the recovery. What we're talking about there is rising numbers of business failures, increasing bad debts, and parent unemployment. So a good start, but no guarantee it will continue. In terms of the Irish economy, I suppose the first thing to say is we entered this recession in very good shape. And let's not forget that. We had full employment, we had a budget surplus. We also had greatly reduced debt levels within the economy, particularly in the private sector. We had a stable housing market that wasn't overheating. House price inflation was right around 1%. We had a large balance of payment surplus. So some of those factors that were, I suppose, contributed to the last recession are not present on this occasion. The other thing we have here is a large multinational sector, which often helps us weather downturns. And actually, the Irish economy was unique that it grew in Q1. Now, the domestic side contracted by 1.5%. That was all concentrated in March. We saw declines of 2.5% in the UK, 4% in the Eurozone, but Ireland actually grew on the strength of the exports from its multinational sector, and also investment held up pretty well. What we've seen then in April and March is actually tax receipts have held up better than expected. It's not just corporation tax receipts. Income tax receipts were stronger than expected, and we've seen evidence of a switch to online shopping. So the hit to VAT receipts, while it wasn't that, but it was still significant. It wasn't as big as expected. Again, the measures put in place by the government, I don't think people appreciate this. Roughly half the Irish workforce at the peak in April and May was on income support measures, be it the temporary wage subsidy, be it the PUP payments, be it the standard unemployment assistance. And again, here, we've been very successful in terms of suppressing the virus. So we have been able to open up the economy at a quicker than expected pace. And actually, we had data yesterday. Obviously, retail sales took some hammering in March and April. There was a good rebound in May. Retail sales are up strongly. Now, there's still a long way to recover the falls in March and April. But that was only with a partial reopening of the economy, and all the indications are picked up further in June. So again, as elsewhere, there's a recovery underway. Now, I think we do need further government supports. I noticed a commitment by Heather Humphreys last night, very much focused on maintaining that temporary wage subsidy scheme and maybe moving people off the PUP back onto the wage subsidy scheme as a return to employment. I think the SME sector is a crucial employer within the economy. That scheme may need to be recast in terms of the loan guarantee scheme. And the new government is promising a support package by the middle of June to support economies. So, it has been a very deep recession. There are government supports there. The ECB will keep interest rates low. We have a strong multinational sector. So, there are challenges ahead, but and we came into this good shape. So the Irish economy has shown, you go back to the currency crisis back in the early 90s, you go back to the catastrophic recession of the last decade, stretching into 2011, 2012, the Irish economy has shown the ability to respond strongly. And hopefully that can follow with the support level of the supports that are being put in place. And finally, and just briefly, I alluded to some long-term structural impacts for economies generally. I mean, what we're seeing here is something that was already underway, is an accelerated use of technology. And even during the lockdown, I mean, I have 5 kids which are between 16 and 21. I mean, there's vans pulled up outside my house literally every day. We're moving to online shopping. I'm booking online to go to the gym. You'll be booking online to go for your medical services. We could see more education online. Look at the Zoom, the meetings we're having today, increased move towards cashless payments. They're all going to remain, I think, permanent changes from this. A permanent shift to remote working, that is going to remain there. There may be reduced demand for offices. Maybe people will be willing to commute more if they don't have to do it as often. And I think for businesses as well, this has taught them, maybe a bit more focus on the security of supply lines, maintain adequate stock levels, the sustainability of your business, and not just solely focusing on costs. So there will be big structural changes that will flow from this. Some will be temporary, some will be permanent. I think once social distancing ends, we will see a return to some old ways. People are still going to go to Crow Park to watch matches in their tens of thousands. We're going to resume foreign travel, live entertainment. I still think we want to go to pubs and restaurants, etc. But that will require the social distancing. So there'll be some temporary changes, but there'll be some permanent changes as well. So that's a very quick stop of an overview. Very deep recession. Economies are beginning to bounce back. The data have been good, but there's still risks out there, and we will require continuing support and probably additional support from governments and central banks. So I'll hand back to you, Brendan.
Thanks, Oliver. Your observations are interesting, particularly around the change of work practices, remote working, and I suppose dealing with supply chain issues. And I suspect they will be recurring themes for lots of businesses in the coming months. Moving on to our next speaker, who is Conor O'Brien, Business and Advisory Partner at RBK. As mentioned in my intro, Conor will now outline some practical strategies and solutions as businesses begin to emerge from shutdown. Conor.
Thank you, Brendan, and thank you, Oliver. Over the next number of slides, I'll just bring you through, I suppose, practical ways as to how you might address the challenges facing your business in the months ahead. The first area there I've identified is stimulus and subsidy and supports. This is the first thing you must do, and it's to take advantage of the many subsidies and loan supports available to SMEs. We're all familiar at this stage with the TWSS and the COVID pandemic payment, but there are a myriad of other support schemes available from your local enterprise office and Enterprise Ireland. And likewise, there's a number of loan schemes available from Microfinance Ireland and the SBCI. And those loan schemes, they're all on top of the supports available from the pillar banks. A recent addition is that Revenue have introduced a tax warehousing scheme. So where tax liabilities that were deferred during the crisis, they can now be parked for 12 months at a very good interest rate of 3%. So that's a really welcome addition from the Revenue Commissioners. I don't propose to discuss in detail here today all the various schemes, but I can't stress enough the importance of familiarising yourself with the respective schemes, understanding the qualifying criteria, and taking full advantage of the schemes. Like in essence, this is money, these are schemes, it'll only come once, and it's as near as free money you're going to get, so I really urge you to go and grab it. Moving on then to the next next slide. I suppose this is just an approach to assist you identify the challenges facing your business and formulate a response to those challenges, and then flow the financial impact of those changes into your forecasts and financial projections. And as businesses reopen, I think it could be useful for owners to adopt a mindset of, if I were starting the business today. And with that mindset, then answer the questions on the two sides of the page. So on the left-hand side, the questions concern your business model pre-COVID. And on the right-hand side, the questions are prompting you to, I suppose, reimagine your business model post-lockdown and post-COVID. So whilst the questions at one level are very simple, they're the what, who, and how, and where. But for this exercise to really work, you need to drill down into the detail and truly understand your business. So for example, if you take the first one there, what did I sell? Well, in answering this question, you need to answer, why did your customers buy? So for example, I sell widgets, but my customers buy them from me and not my competitor, because I guarantee next day delivery. Now, when you bring that to the other side of the page, you'll see that maybe the challenge is people still want to buy widgets, but the guarantee of next day delivery that you give and is the reason they buy, maybe you can't deliver that because of social distancing restrictions in your warehouse. And this then prompts you then to the solution stage, where maybe the solution is to split your warehouse into 2 shifts, which then could drive up your costs. In turn, you may need to implement price increases, which in turn can reduce down your sales volumes. So by completing this exercise, you're going to formulate your new business model, which you'll use in the months ahead. And in addition, then it'll give you the granular information, the cost increases, the potential price increases, the potential drops in volume, in order to prepare detailed forecasts and financial projections for banks and stakeholders. And you're also going to tease out and identify the likely scenarios that are going to play out for your business in the months ahead. So just moving on then the next page. So Oliver touched on this and alluded to this. As you complete this process, I think the solution to many of the challenges is going to be technology driven. And embracing and adopting new technologies is going to be a critical component of success for SMEs in the months ahead. I think not only that, but I think technology is going to level the playing field here. It's going to provide SMEs with a real opportunity to compete with larger companies in some areas. I think in some areas, the SMEs may even get a head start on your larger competitors just by virtue of an SME being more nimble and quicker to make and implement decisions. So really, you can't ignore technology and technology-driven solutions in the months ahead. On the opportunity side, it's very, very easy to get all consumed with the negativity and the change aspect of the crisis. But if this crisis has taught us any one single thing, it's necessity is the mother of all invention. This crisis is full of opportunity. It's been truly disruptive, and you must be alert and open to finding and capitalizing on the opportunities that it's going to present. I suppose if you look, Irish distillers, who would have thought that Irish distillers would be making hand sanitizing lotion? It's the most obvious thing, and yet it took this crisis to bring it about. I've touched on in the previous about the impact on costs of pricing and volumes and preparing your forecast projections, and then exploring your various scenarios. If you just want to go over the page. Now, so at this point, you've formulated your business model, you've identified the 3 or 4 likely possible scenarios that will play out in the months ahead, you've prepared your forecasts, you've your financial projections for each scenario. Now you're ready, prepared, and have the ammunition to engage with your banks, with revenue, with staff, and your key suppliers. In respect of banks, it's key that you engage with your bank and engage early. They're going to take great comfort from the fact that you have a plan, you have projections, and you've thought this through, and you have a plan for the months ahead. It will be critical. I suppose in dealing with banks, you'll be realistic. Avoid trying to tell them what you think they want to hear. If I were to give you a guideline, perhaps under promise and over deliver, rather than over promise and under deliver. And likewise, you can apply that across to revenue, to staff, to critical suppliers. 2 tools that I think are really useful, and I'd encourage you to develop and use a tracking sheet and just a simple action list. And so a tracking sheet is really, it's really putting the key KPIs on a 1-page sheet, and you keep this either daily or weekly, and so that you can look back on 1 page in 1 place and identify the trends that are developing. Your business and how it operated pre-COVID is not going to operate the same way post-COVID. So it's really key that you track these and you have these. It allows you to, I suppose, react in real time, not after the fact, not when it's too late. So I suppose what would you capture? Your sales, your orders received, your orders fulfilled, your orders shipped on a daily, weekly basis. If you're business to customer, it's probably daily sales. If you're business to business, it may be weekly sales. It may be sales by sales rep, but you need to get it in on a 1 page and get those, be able to see those trends in front of you. It'll help you identify bottlenecks. It's going to identify changes that are working and changes that are not working. So if you implement a new pricing structure or a new product, or you change something within the warehouse, you'll see how that will play out on that tracking sheet in front of you. And most importantly, it'll give you at a very high level how you're tracking and how you enable you to monitor your actual versus the forecast that you've prepared. The second point is around the action list. I think it's really important to find an hour in your week, probably Friday or a Sunday afternoon or Sunday evening, and to jot down what are the key targets that you need to do next week. So what are the sales targets? What sales do you have to close? Who has to close them? And maybe the top 5, the top 10, whatever is going to give you 50-60% of your target for the week ahead. Likewise, what cash do you need to collect? What do you need to do? What phone calls do you need to do to get that cash in? And then what key payments do you have to make? And when it comes to payments and it comes to allocating your cash, really your foremost rule is paying the supplier that will get the stock into your warehouse that will then deliver the sales of the weeks ahead. So you have to be looking at it that way. But I think taking that hour out is really important and critical. And finally then, final takeaways: you need to focus on your business. You need to have that tracking sheet and be able to, pull it out of your pocket or open up that Excel on your iPad and be able to see where you're at today and be 100% on your business. You must be alert to the opportunity. This crisis is going to present opportunities. You need to grab those opportunities when they present themselves and run with them. Final note, look after your staff and they'll look after your customer. You must be cognizant that staff will have concerns and worries. And I think you have to bear that in mind, but I truly believe if you look after the staff, they look after the customer and the sales will flow from there. So I'll hand you back over to Brendan. Thank you.
Thanks, Conor. Some practical hints and advices there as businesses are moving forward and following the lifting of restrictions and the restarting of our economy. Moving on to our final speaker this morning, it's Yvonne Clarke, HR Solutions Manager in RBK. Yvonne's presentation will consider the challenges of reintegration of staff and health and safety considerations and how both employers and employees may have to adapt in these changing times. Yvonne.
Thank you, Brendan, and good morning, everyone. So as Brendan said, I'm just going to focus on the issues, or the live issues in relation to employers and businesses returning their staff back to work safely. I'm just going to focus on the protocol that was issued back in May by the government initially. I'm not going to go through it all, it's a fairly lengthy document, but just to remind employers about the Safety, Health and Welfare at Work Act 2005 and the general duty of care to ensure the safety, health and welfare at work of employees as well, in as far as is reasonably practical. The protocol itself focuses mainly on mandatory measures that are to be implemented in businesses and by employers, and in particular the Health and Safety Authority will be carrying out, and this is very important for businesses and employers to be aware of, they will be carrying out workplace inspections on a very regular basis. You see there, even since the 18th of May, 2 weeks after the 18th of May, they had conducted 1,000 workplace inspections. And I am familiar with a number of different businesses whereby they did do an inspection and they issued the employers with improvement notices, some for 1 day notices, as in they came back the very next day basically to see if the measures had been implemented. It's also important, I think, as well too, for businesses to be aware that the HSA can enforce and can implement prohibition notices whereby they may close down your business or part of your business if they're not satisfied that the measures are being implemented. So if we move on to the next slide, we'll focus on some of the key elements of the protocol. Now there's a lot there, as I said earlier on, it is a fairly lengthy document, but I do think that the key areas that you as an employer or that you as a business owner need to be aware of is that you have developed a COVID-19 response plan. So if there is a suspected case of COVID-19 or even a diagnosed case of COVID-19, that you actually know what to do in that instance. It's all about the protection of employees as well and returning people back to work safely. So make sure that you have a COVID-19 policy in place as well. We've all heard too in recent times around the pre-return to work forms. These need to be completed 3 days in advance of anyone coming back into the workplace. However, I would advise that even if you had people working throughout COVID, that throughout COVID-19, that they all complete, that you get all your employees to complete this pre-return to work form as well. The protocol itself also identified a COVID-19 worker representative. This role, in the main, what I'm finding is that it's normally a health and safety rep role, or they incorporate it into their role, but this role is very important in the sense that it works very closely with management to ensure that measures are being implemented, but also to ensure that communication in relation to guidelines from the HSE or the workplace are being implemented and communicated to staff. Another area that you need to also provide is induction training to all staff. By what I mean by that is, again, it's all around the measures, the mandatory measures that you have in place, such as occupational hygiene, social distancing, have contact reduction and a contact log as well too. So what I would say and what I would advise all employers and businesses to do is to make sure that you keep your records, because the HSE will come in and they will do a thorough inspection to ensure that you have been adhering to the protocol itself, but also that you have been introducing the mandatory measures itself. Okay, Deirdre, I might get you to move on to the next slide, please. Those over the last number of months, and in particular what we've noticed in HR Solutions, is these are the common themes that are coming to the fore from employers and businesses as well. What do I do if I have an employee who is refusing to return to the workplace? You'll notice, and Conor referred to in his last slide as well, about look after your staff and they look after you and your business as well. But it's about communication and engaging with the employee, see what their concerns are. Maybe they themselves have an underlying issue. Maybe they have childcare arrangements. Maybe they live with somebody who is in the at-risk category or the high-risk category as well. Talk to them. The whole purpose around the protocol is returning back to the workplace safely. So you may need to do a risk assessment with them to alleviate their concerns, but I would advise that you engage and you communicate with employees to see what exactly their main issues are. Second area that we're seeing a lot of is, can I implement pay cuts to reduce working hours for employees returning from layoff? The straight answer to this is yes, you can. However, what I again would suggest is that you have a business rationale for this, that again you communicate with employees, but bear in mind as well too, you cannot implement a pay cut just across the board or reduce working hours. This is part of their terms and conditions, so you need to get their agreement, and you need to get it in writing as well before you do that. Otherwise, you could see yourself in a third party at the WRC in relation to claims under the Payment of Wages Act. So just be very aware of that. Next question is, or the next common area that was being asked for advice on, do I need to reissue contracts of employment to employees returning from layoff? No, you don't. Layoff short-term piece should already be in contracts of employment. Can I change employees' working patterns or shift patterns? Again, Conor touched on this earlier on. Yes, you can, in consultation and with engagement with your employees as well. But you could be looking at different teams working, like maybe a team A, a team B, in the event that someone has a suspected case of COVID or is actually diagnosed with COVID itself, and you need to maintain your business and ensure that you are running and meeting your customer demands as well. This is an interesting one in relation to recalling. So as people ramped up, I suppose, from yesterday onwards, how do I recall employees back to work who've been laid off? Can I bring some back and not others? Again, I would err on the side of caution here in relation to reminding employers and businesses of the employment equality legislation and the 9 grounds of discrimination. So be very clear in relation to your recall policy or your selection policy to bring people back to work, and be very aware of the 9 grounds, the 9 discrimination grounds under the employment equality legislation as well. Annual leave accrual. Do my employees accrue annual leave whilst they have been on layoff or in short time? If an employee has not actually been working, as in they've been on the PUP payment, the Pandemic Unemployment Payment, or even if you were paying them through the temporary wage subsidy scheme and you had no work for them, they were in effect de facto layoff. So under the Organisation of Working Time Act, you actually need to work to be entitled to accrue annual leave. And same with short time as well. So if I worked 5 days a week and I returned to work and I was working 3/5 of my normal working week, then that's my annual leave entitlement, and that's what my annual leave entitlement is based on as well. Just as well to bear in mind about the public holiday entitlement. So if you worked 40 hours in the 5 weeks prior to the public holiday entitlement and you were laid off, then the employee is entitled to the compensation for that public holiday entitlement. That would normally apply, I'd say, in relation to the Easter holiday, but just be aware of the rule around the public holiday entitlement piece there. Again, both Conor and Oliver touched on this in relation to the practice of employees working from home. The government is still encouraging people to work from home for as long as possible. So if you require somebody back into the office or back into your business, again, have justification in and around what the business demand and the business need is for them to come back into work, but be cognizant, and again, be cognizant of potential employees that have childcare issues maybe, or again, as the first question, as I referred to in the first question, about people's concerns as well too. And again, what we're seeing more of in the recent weeks is, can I commence making employees redundant at this time? Yes, you can, but again, it has to be a genuine redundancy. It's the role that is being made redundant, not the individual, and you still need to adhere to the process, the consultation process, which could be anything from 2 weeks to 4 weeks in relation to making somebody redundant. Okay, Deirdre?
Thank you very much, Yvonne. Thank you, all the presenters, for bringing us through some very insightful issues around the economy, around returning to business, and particularly on the HR front. I'm just going to very quickly run through some banking supports before we get into the Q&A session, and we aim to be finished by latest 10 to 10, so we have a little bit of time. So in terms of the banking supports, and Conor did talk to some of these supports in terms of the government supports that the banks basically manage on behalf of the government. So you've heard some of these, and I'm sure a number of you have actually benefited or started to use them. So I suppose in terms of the banking support, the main support that we have had customers looking for is the payment break. So the payment break was initially issued for 3 months, and it was done in conjunction with the government and the BPFI and Bankers Federation. And essentially all banks were offering the same option, which was a 3-month payment break to everybody, no questions asked effectively, other than the implications of COVID on the business or on the individual. So they were mortgage payment breaks, personal loan payment breaks, and SME payment breaks. So there's over 50,000 of those applied for within AIB. So that was extended recently up to 6 months, which essentially anybody who's availed of the first 3 months will be automatically contacted by their banks to offer that second 3-month break. So just importantly, just recently there, the 3-month, the initial payment break has been extended. The period that you can apply for that payment break has been extended to the 30th of September. There was initially it was going to be it was finishing today, the 30th extended in agreement with the EBA, the European Banking Association Authority, rather, to extend that to the 30th of September. So that's an important option that's still available to businesses and individuals. And again, if people feel they need that payment break, at this stage they've managed so far, but they really would like that cash flow back into their business, I would encourage you to take up that support. And as I say, that's available from all the pillar banks. That just is our contact number, and you can avail it through our internet. The other solutions out there are your normal working capital solutions that we have regardless of COVID, but obviously are very important in this current time. And that's your overdraft, the business credit lines, which are really for seasonal purposes, and things like prompt pay for your taxes or insurance premium financing for your insurance bills. And they're very popular at the moment because, again, cash is king at the moment. People are really trying to conserve their own cash in the business. And while there is concern about taking on too much debt, these bills have to be paid. So in essence, it just spreads out the cost over a longer period. Just in the relation to treasury solutions, is just not to forget about the importance of managing your international trade and the payment solutions around that, and also obviously the exchange, managing your exchange rates. Really important. All of the treasury desks are continue to be manned in all the banks, and you've people available there to discuss those solutions with you. So just really be mindful of those as you maybe get back to business and get back to ordering or selling abroad, that you have that aspect of your business in hand. And then just finally on this slide, the merchant services, and that is your Visa merchant. With online selling, obviously that is a significant payment solution within a business, and there are options there if people are struggling with fees, etc. to contact the merchant services team and discuss what those issues are, but more so also discuss the solutions that are available to assist your business, either getting back to business or ramping back up over the coming months. You can move on to the next slide. So Conor has already referred to majority of these solutions, which are basically the government supports that the banks essentially manage. So the first one is the SBCI, the Strategic Banking Corporation of Ireland. So, they basically put funding into the marketplace at reduced rates and generally unsecured product. So this fund was originally the SBCI Brexit Fund, and it was repurposed immediately at the start of COVID in March into the SBCI COVID-19 Fund. And these are available through all the pillar banks. The fund is almost used up at the moment, but the SBCI are putting additional funds into that, and we would hope to have our allocation in early course. Essentially, it's a 1 to 3 year facility, amounts of up to from 25,000 up to 1.5 million, up to $500,000 is unsecured. And the first step really there is to get an eligibility code from the SBCI by going through their website, and you will need a business plan to get that eligibility code. As I say, it is still worth going in and looking at that option. Well, some funds are still available through the banks, but as I say, if that fund dries up, there will be new funds available. So it's good to have started the process. In terms of the second one, the credit guarantee scheme, and there's quite a lot of discussion on the news at the moment about the new credit guarantee scheme. So this is the existing one that's been around for quite some time. So not really to focus so much on that because sort of the rules are the old rules, but really there is a new credit guarantee scheme under discussion, which I suppose in the context of how the UK has responded to this crisis, they have gotten significantly more government support money out to businesses. And I suppose that's in essence the discussion of this particular credit guarantee scheme, is how do we get as much money out to that sector, I suppose, with it, I suppose, as minimal kind of requirements from a banking perspective. So we would hope that scheme will be announced during July and be available as quickly as possible. Unfortunately, just at this moment, I cannot allude to the terms of that as yet. Microfinance Ireland, again, these are schemes that are already out there. And again, for smaller businesses, these are loans of between 5,000 to 50,000, and again, for 1 to 3 years, and you can get up to 6 months interest and repayment free. So they are, again, you can contact them directly, and the next slide has the web address to apply for that financing, or you can come in through your bank and apply through your bank at a slightly reduced rate to applying directly for those funds. And the last one just is Enterprise Ireland, and I know Conor mentioned the LEOs as well in that bucket, and that's really, again, in terms of government supports that are available. They are loans, and ultimately you do need to adhere to certain requirements. But again, in a lot of cases, the Enterprise Ireland, which is for aimed at businesses who are exporting, is they look for the banks to possibly match fund, but there is a significant fund there available. So just onto that last slide before I go into quick Q&A. Look, they're just some of the contact points in AIB in terms of looking to get to some of these solutions. Really, as Conor said, it is really important to get in contact with your bank early, whoever that bank is. If you have a relationship manager or a dedicated relationship manager, please make sure you're contacting them, or come in through the direct banking channels or through any of the branches. All of the banks have maintained their full branch network open, as you know. Yes, there are sometimes queues outside, but the phone lines are available, and the internet is another place to log into to see who and what you should contact. So that was just a very whistle-stop tour of some of the supports available on the banking side. Debt is not the only solution, as we know, and obviously the variety of grants available, and I know Aileen will come on quickly to summarise, that are available through the chambers and through the LEOs is significant, and it's really to make sure you're accessing everything that is out there at this time to help your business get back up and running. So without further ado, onto the Q&A section. We just have 2 questions. I think there were 1 or 2 in advance, and I think they were answered by the presenters. For Yvonne, do you expect that the return to work protocols will be relaxed in due course?
Well, I think everyone would hope that they would, Deirdre. However, even from listening to the news this morning, Tony Holohan is requesting people to avoid, for example, foreign travel or going abroad on holidays unless it's necessary. And even Oliver made reference there earlier on this morning about Leicester over in the UK is now in lockdown. So I think until such time as, whilst Ireland is doing good in relation to the COVID-19 and trying to keep it at bay, until such time as we get further guidance from the government, my advice is very much stick to what the protocol is saying.
Thank you, Yvonne. The last question there is for Conor, and Conor, I think it refers to your first slide because it came up on when you were talking through your first slide. Would you apply the same approach to companies burdened with debt or experiencing trading issues prior to COVID?
No. Like if coming into the crisis, a company had debt problems or trading difficulties, I think that's only going to have been exacerbated and worsened over the last number of months. So I'll be looking to certainly take soundings and advice from your accountant or an insolvency practitioner. I know our own Brendan's team, the insolvency team, have a dedicated helpline, confidential to give it, and they'll give advice around that area. But certainly, if you're challenged on the way in, it's not going to have got better, and take advice, because the repercussions for directors are quite significant if they're seen to be trading whilst insolvent or trading recklessly.
Thank you for that, Conor. And Conor, we have another question for you in relation to the revenue warehouse that you referred to in one of your slides. Is the revenue warehouse debt interest free for some time?
That, from what I have seen of it, it's a 3% rate for a 12-month period. They may be referring to the initial stage where you could defer. So during the crisis, you could file your return but didn't have a requirement to pay. So that's what they could be referring to there.
Okay, I'm very conscious of the time. We're just coming up just past a quarter, and I know Aileen has a drop dead date time, and she would just like to say a few words to close off this webinar. And we've had some thanks on the Q&A session to all the contributors, all very informative and some very good checklists to utilise going forward. And as Brendan mentioned at the opening, these slides will be made available to you all via email for anybody who signed up to this particular webinar. So thank you from us all, and I'll hand over to Aileen Eglington, Chairperson of Dun Laoghaire Chamber, to just close out this webinar.
Good morning, everybody. And Conor said that technology was levelling the playing field. Well, all I can say is my camera keeps telling me it's occupied by other apps and I'm alone in the office at the moment. So I don't know what to say about that, but either way I can speak. So it's very good. I think as President of the Chamber, the first thing I have to say is that listening to everybody and all the speakers this morning, it's a daunting time for business. And notwithstanding the fact that so many poor people have lost their lives in this crisis, I really believe that business is paying the price. And it's something that we all have to work with together. From a Chamber's perspective, we've had our doors open right throughout the crisis. And I would commend Gabby Mallon, our CEO, and all the staff, because they've kept the doors open. They've been supplying certs of origin to local companies. They have been disseminating information that has come from Chambers Ireland, from central government, from all of you indeed, and also from our local enterprise board, because one of the key things in my mind in this crisis is actually making sure that we make use of every grant and every break that's available to us. And I think that's one of the things that has really come across. If you take the local enterprise board in terms of there has been business recovery grants, there have been the online trading vouchers, and now the Restart grant. As a chamber, we've had some issues with the Restart grant, and I think it's important for maybe a lot of people listening this morning, because all of those grants are rateable. And we've had it clarified by the council that these grants are also available to people who are in a rateable premises. But that does exclude the fact that an awful lot of companies listening are not in a rateable premises. So they could be sole traders working from home, but yet could have a big turnover. So it's one thing we've been addressing with central government, and that's really where chambers come in, and why we have been, I believe, so invaluable in disseminating all of this, because we're trying to reflect everybody's views locally in the county, but we're also lobbying to government, we're lobbying through Chambers Ireland, and we're trying to do as much as we can to reflect things. And even what Conor was talking about there about revenue and the warehousing of debt, I'm shocked to hear it's at 3%, and I think that's something maybe through SME recovery or something we should be looking at. And that's why I think it's so important that we all have a voice in business at this stage, and that business has a very clear voice in government. So really, that's all I want to say. We're open, we're doing as much as we can for our members, and it's just so important to avail of every single grant and opportunity that's been outlined by the speakers this morning. So thanks for giving me the opportunity, and maybe it's just as well you didn't get the video.